Hi traders, welcome back to another YouTube video. So in this video, I'm going to talk about what are the 3 important elements that has turned me into a 6-figures full-time trader and a father as well. So trading is something simple yet difficult. Now, a lot of beginner traders, they come into the market with the expectation of, I want to make quick money, because that's how the market and that's how the entire social media is made, to make you have that kind of illusions, to have that kind of infinity imagination. And let me tell you something, if you are a new trader or someone who has less than 2 years of trading experience in general, you will come into, you eventually bump into a lot of different situations where it basically the market just slaps you and give you a wake-up call. It's not that simple. So there goes the first point. If you want to become a good trader, you need to constantly reassess, reevaluate, and reflect yourself. So why is this kind of a self-reviewing, self-assessing, self-reflective process so important? Is because it allows you to improve. If you do not look at things in an emotional way, there's no way you can consistently beating the market. Even myself as well, even if I'm a good trader, I teach people how to trade, but it doesn't mean I'm a perfect trader. There are times where I will make mistake, and I sincerely accept it, because I'm a human being as well. I will make mistakes, but the big problem is good traders are constantly finding solution to prevent themselves, to avoid themselves from making silly mistakes, right? Some mistakes are unavoidable. Maybe today you are just not in tune with the market. You're taking setups that according to your trading plan, according to your trading system, but it just doesn't play out well. Then that's fine. That's not what we call a mistake. That is just a plan. Losses are part of the game plan as well. If you want to become a consistently profitable trader, you will take thousands of losses. Are you going to let one losses to upset you? If one losses is enough to upset you, it basically means you over leverage, or you over traded, or you shouldn't have taken that position. So remember, so let me jump into the chart and let me just show you a quick example of my personal loss yesterday. So if you look at the chart here, I'll just go through my thought process on pound dollar from the top-down analysis perspective, right? I was looking at the pound dollar, and I've been talking with my community member about a possible reversal since 26th of September. 26th of September. Price had that strong sell-off. I talked about a buying potential here. We actually took a buy there, and I won't go too deep into that analysis. We took a buy around there. When price pulls back, I personally took a long position over here as well. So these are some of the good positions that we took for the past few weeks. So yesterday, when I was looking at the market on the 15-minute time frame, I was actually expecting continuation here and possibly some sort of continuation here. So why is it that? Is based on the lower time frame confirmation. Both scenario actually presents a good break of market structure. Like this one, we break above that structure. I was looking for continuation, but I did not get into that one. When I was looking at the market doing this turn, come all the way back, testing my previous structure, I took a buy, then I got stopped out. Then what happened next? Price eventually run for a couple hundred pips into my intended direction. So most people, when they look into a trade like this, they will start beating themselves out and say, how can I miss out this trade? That's such a big move. If I took this, it would have been how much money that I've made. It would have been how many are. It makes no sense for you to look at your loss in terms of monetary perspective. It's a proper self-assessing and a self-reviewing process. Is basically for you to look at what have you done, what are the mistakes that you have made in a very unemotional way, in a very objective, a very rational method, right? If you look at things with the mindset of I missed out how much money I could have made, $10,000, $20,000, then how can you improve? You need to look at the chart and sincerely ask yourself, what is the mistake that I've made that caused me enter the trade so early? Am I following my confirmation? Am I following my trading plan? That's what's matter, right? If your answer is yes, tick, it's fine. Then that loss is unavoidable. Alright? If your answer is no, I slightly rushed my entry, I could have been waiting for another big impulse to come in, then I buy the pullback, I buy into the dip. And then just write it down, take some screenshots, then you improve next time. That's the journey of a trader. Whether if you are 5 years in the market, whether if you're 20 years, 30 years in the market, every good professional trader, they always will review their trade, right? Because we're human, we'll make mistakes, right? So that goes to the second point, comparison. So one of the biggest mistakes that you can make is to compare yourself with someone else, or what I call compare level 1 to someone else level 10. I wouldn't call out any other trader who always post up the Lamborghini or Patek Philippe, private jet or whatsoever. But everyone has a different lifestyle, right? And everyone has a different journey as well. Maybe that person that they are constantly seems like they're showing off their sports car whatsoever, they are already 10 years down the road into this trading business, and you're only 2 years in the game. How can you compare yourself to someone else who already have 10 years of experience in the market? Because eventually, if you continue pushing harder, if you stay consistent, you will be there as well. When I first started trading, especially in my first 1 to 2 years, I was constantly looking at social media and thinking about how can all these people make that much money. They are taking the same setup, but they are making 10,000. But I'm only making what, $100, right? Because that's just how the way the world works as well. Not just the market, just the entire world. If you have more capital, you will be earning more as well. Because risk equals to reward. If you risk more, you make more, right? It's that simple. Trading is a business. If you are constantly envying someone, you can do that, but just make sure it provides you positive outcome. As in, if it pushes you to work harder, if someone else's success makes you want to work even harder as well, then that's fine. Then maybe that envying element act as a motivation to your own success, then it's fine. Just continue doing it. I have no opinion on that. But if you're someone who's looking at someone else's success and start feeling ashamed and start feeling unhappy, demotivated because you feel like you have achieved nothing, like myself, I'm someone who find how can I say this? If I look at someone being a lot more successful than me, I don't find it that motivated. In fact, sometimes it could work backwards for me, because I start looking at things not in an objective manner. I start looking at things from the monetary perspective. I want to buy that Lamborghini. I want to buy this. I want to buy that. It doesn't help me at all. In fact, I used to have a friend that's constantly showing his watches whatsoever to me. He's a lot more successful than me. He's making millions a year. He's showing me all those watches that he buy every week, every month. Then every time after he talked to me, I just feel like I've shrunk. I just feel like my energy has been exhausted. My motivation level is at low, because I just don't find motivation at that. In fact, it just makes me feel like, is trading going to work? Is it going to work? He's doing a logistic business, I'm doing trading. Is this really that industry that I want to be in forever? The same goes to direct comparison. If someone else is a better trader than you, just let them be. Because in the end of the day, you got to make money to feed yourself. You are not making money, you are not staying in the market to complete someone else's expectation on you. Right? Whether if you are making $100 a day, whether if you're making $1,000, $10,000, or $100,000 a day, encourage yourself, compliment yourself, because you are making progress. You are not a failure. You are just on the journey to success. Remember this, do not ever say yourself as a failure, but instead just say, I'm a journey to perfection, I'm a journey to success. That's how I always motivate myself. When I was someone who had zero income, who had zero money in the market, to turning a couple hundred, a couple $1,000 into 25,000, turn 25,000 into 6 figures, I was working hard and I stopped comparing myself. That's exactly when I start realizing that maybe I'm not that bad. Right now I have a wife, I have a kid. All I care is how can I make sure I stay consistent and I constantly improve to make sure I can provide a shelter and food on the table for both my wife and my kid. That's all that matters. You are not living under someone else's expectation. You need to live for yourself. So stop comparing, stop feeling ashamed, just work hard. If you work hard, God will reward you. You'll eventually be there. Alright, so there goes the third point. The third point is actually just taking a step back. Alright, so this is a very simple point. Most of us just don't realize the importance of taking a step back. Part of the reason that makes me a full-time trader, or what we call a good trader, is because when I take a loss, I look at things with a very calm manner. I don't look at my loss and say, how can I get in again? How can I get in again and again and again? Because if you're always having the mindset of, I take a loss, if you look at the chart again, assuming if I take a loss, I immediately again just hawking, just staring at the chart like crazy, I'll be thinking this as a double bottom, right? I took a buy here again, and then maybe if it goes down, reject a little bit, I took a buy again, and maybe I got it correct here. In one perspective, you might feel like, hey, at least in the end you might got it correct. Yes, of course. If you're constantly buying into something, just like in your casino, you buy heads or tails. If you keep smashing the head buys, of course eventually you'll win. But that's not trading. Trading is about having a trading system that is being executed as flawless as possible, because you have followed your principles and your rules, and then the outcome is completely up to the market. That is proper trading. You execute things according to your plan. If you execute things not according to a plan, or if you execute things according to luck, that is merely gamble. Imagine if I was just smashing the buy button until it works. That is not proper trading. And in fact, if you start doing things like that, you will notice your equity curve starts swinging very aggressively, because you have no plan. You're trading based on luck, and everything based on luck, you eventually just give it back. I don't care if today you flip a $2,000 account into $100,000 in a day. That is merely luck. What is your level, or what is your power? Your power is here, your skill set is here, your luck is at there. And trust me, that luck will eventually diminish to meet your skill set. So I always feel like this: if you're someone who makes money through luck, you eventually give it back according to your skill, according to your mindset, because your mindset, your skill set are just not at par with your level of success, with the money that you make, the profit. Alright, so take a step back is very important. Whenever you take a loss, you need to go back to the first step and start reassessing, reviewing, and reflecting everything. That's how you grow. If you don't look at things in a very objective manner, you will never grow. And in fact, you will start falling into traps of overtrading, revenge trading, FOMO, whatsoever. And that's the intention of the broker as well. Broker want you to execute as many trades as possible. That's how they make money, through commissions. So don't fall into the trap of overtrading and revenge trading or FOMO, because that is not proper trading. Proper trading is about sitting in front of the chart for 5 to 6 hours just to wait for one opportunity. That is proper trading. Alright, so that sums up today's YouTube video. If you like the video, please don't forget to like, share, and subscribe. And let me know in the comment section below what's your thoughts, and I'll see you in the next video. Take care. Bye bye.